Students, we know that bookkeeping and accountancy is the core subject of commerce faculty. This is compulsory subject. We are in first chapter of 12th standard. The name of first chapter is Introduction to Partnership and Partnership Final Accounts. Let's know about Partnership Final Accounts part 2nd. Today we are going to learn partnership form, Introduction to Partnership Final Accounts, various steps in accounting, necessity of preparation of final accounts, know the meaning of trading account, format of trading account. So let's start with partnership form. Introduction to Partnership and Partnership Final Accounts is the first and most important topic of 12th standard. If the businessman desires to expand the size of business, there arises more capital, additional skills, extra manpower, efficient management, and fellow partners to bear losses and liabilities. In such case, formation of partnership is adopted. Partnership form of organization is always suitable or useful to medium and large scale of business organization. Now come to the next point, partnership final accounts. Students, you have already learned in 11th standard final account of sole proprietary concern, but in 12th standard partnership final accounts to be prepared. Both are prepared in similar lines. Only difference is that all partners capital accounts and partners current account shown in partnership final accounts. Final accounts, what is the meaning of final accounts? The accounts and statements which are prepared at the end of financial year is called final accounts. Final accounts are prepared at the end of financial year. Financial year also called accounting year. As per Income Tax Act 1961, financial year started from 1st April and ends to 31st March. For example, we take financial year starts from 1st April 2019 to 31st March 2020. Preparation of partnership final accounts is the last step of accounting cycle. So come to the next point, various steps in accounting. Which are the steps involving in accounts? First step is preparation of journal or subsidiary books. As we know that accounting is a systematic and scientific process of maintaining records of business transactions. All the transactions are recorded in journal or subsidiary books. After recorded business transaction in journal or subsidiary books, the journal entries posted into ledger accounts. At the end of financial year, all ledger accounts to be balanced. This is second step in accounting. Now come to the third step, preparation of trial balance considering adjustments. Why trial balance is prepared? Trial balance is prepared to check the arithmetical accuracy in the books of accounts and considering the adjustments. Adjustment is also known as additional information. Additional information given along with trial balance. With the help of trial balance and adjustment, partnership final accounts to be prepared. Preparation of final accounts on the basis of 3 parts. Preparation of final accounts on the basis of 3 parts. First part is trading account, second part is profit and loss account, and third part is balance sheet. Trading account, profit and loss account, and balance sheet. Both are accounts, trading account and profit and loss account. Balance sheet is a statement. So these are the various steps in accounting. First one is preparation of journal or subsidiary books. Second one is preparation of ledger. Third one is preparation of trial balance considering the adjustments. And last step of accounting is preparation of final accounts. Final accounts are prepared on the basis of three parts. First one is trading account, second one is profit and loss account, and third one is balance sheet. Now come to the next point. Necessity of preparation of final accounts. To find out gross profit or gross loss. To find out gross profit or gross loss means gross profit or gross loss should be determined by preparing trading account. With the help of trading account, we find out either gross profit or gross loss. To find out net profit or net loss. To find out net profit or net loss means net profit or net loss should be determined by preparing profit and loss account. With the help of profit and loss account, we find out either net profit or net loss. Next one is to know the financial position of the business. Financial position of the business is judged by preparing balance sheet. Balance sheet is a statement, not an account. Balance sheet is prepared after preparing trading account and profit and loss account. Balance sheet showing financial position of the business at the end of accounting year. How much assets and how much liabilities paid by the business. To find out amount of debtors and creditors. To find out amount of debtors and creditors, it indicates that how much amount receivable from the debtors or customers, how much amount paid to creditors or suppliers. To prepare various accounts for future planning, to know sources and application of funds. Both are useful for future decisions, future planning. Next one is to find out the value of goodwill for the purpose of reconstruction of firm. It refers that or it indicates that to ascertain the value of goodwill in case of admission of partner, retirement of partner, death of partner, and dissolution of partnership firm. To find out various accounting ratios, students always remember that accounting ratios provides financial information for the purpose of financial analysis. So it is very important to find out various accounting ratios. To calculate various taxes of firm like income tax, sales tax, GST, etc. It refers that to ascertain the value of tax liability which is payable to the government. So these are the points of necessity of preparation of final accounts. Now come to the next point. First account of preparation of final account is trading account. Trading account is the first account. What is the meaning of trading account? Trading account is a nominal account. The rule of nominal account is debit all expenses and losses, credit all incomes and gains. Why trading account is prepared? Trading account is prepared to find out the result of business activities which is conducted during the financial year. Trading account always divided in two sides. In left hand side, debit side. In right hand side, credit side. In debit side, all direct expenses are recorded. For example, carriage inward, carriage on purchases, wages, import duty, royalty, etc. In credit side of trading account, all direct incomes are recorded. If credit side is more than debit side, it indicates gross profit. If debit side of trading account is more than credit side, it indicates gross loss. Gross profit means credit balance of trading account. Gross loss means debit balance of trading account. Gross profit or gross loss should be transferred to profit and loss account. Gross profit transferred to profit and loss account credit side under the heading of by gross profit brought down. Gross loss should be transferred to profit and loss account debit side under the heading of to gross loss brought down. Now come to the next point. How to prepare format of trading account? Here is simple format of trading account. Trading account format is very simple, students. So, first of all, write down proper heading with the duration of period. In the books of partnership firm, trading account for the year ended so and so, make proper columns with their proper headings. Left hand debit side write down, right hand credit side, particulars, amount rupees, particulars, amount rupees. Look at the format very carefully. This is simple format of trading account. First of all, write down heading of partnership firm, make the proper columns, debit side, credit side, particulars, inner outer column with amount rupees, particulars, inner outer column with amount rupees. So students, here to know that format of trading account, write down proper heading. In the books of partnership firm, trading account for the year ended so and so, left hand side write down debit, right hand side write down credit, make the proper columns. Students, presentation is very important, so focus on presentation also. Make proper columns, particulars, inner outer column with amount rupees, particulars, inner outer column with amount rupees. In this level, students, whatever we are getting, whatever we are spending, everything will be recorded under one account, that is trading account. Trading account always starts with opening stock, debit side. Trading account always start debit side with opening stock. So write down to opening stock, debit side of trading account. Outer column, amount. Opening stock means stock in hand at the beginning of the year. So it is recorded trading account, debit side. Next one is purchases. Purchases includes cash purchases or credit purchases. Goods are purchased from creditors or suppliers. It is recorded trading account, debit side. Inner column amount. Why inner column amount recorded? Because any return outwards or purchase return given in trial balance, it is subtracted from purchases. So purchases, inner column amount less return outward or purchase return, outer column, final account. Next item is to carriage inward. Carriage inward, carriage on purchases, all are direct expenses, all are related to the transport expenses. So it is debited to trading account, debit side. Dock charges are recorded trading account, debit side. It is considered direct expenses. Direct expenses means those expenses which are related to the production or purchases of the goods. Next one is to wages, productive, manufacturing wages. In this format, to wages, productive and manufacturing wages are given. It refers that amount paid to workers used for production. So it is considered direct expenses and it is recorded trading account, debit side. Next item is import duty. Import duty also considered direct expenses, so it is transferred to trading account, debit side under the heading of to import duty. Next one is to coal, coke, gas, motive power, oil, water, grease. These are treated direct expenses, hence it is recorded trading account, debit side. All these items used for making the goods. Next one is to royalty on purchase or production. Royalty means amount paid for permission to use patents, copyrights for commercial purpose. So it is recorded under trading account, debit side. It is treated as direct expenses. Next item is given to primary packing charges. This is also direct expenses. It is transferred to trading account, debit side. Next one is to factory lighting and heating, to factory rent and rates, to factory insurance. All these items are related to the factory, so it is considered direct expenses and it is debited to trading account. Next one is to works manager's salary. Salary paid to works manager. It means, it refers that inside the organization. So it is treated as direct expenses and recorded trading account debit side. Now come to the trading account credit side. In credit side of trading account, all direct incomes are recorded. Trading account credit side start with sales. By sales, inner column amount write down. Why inner column amount write down? If any sales return or return inward given in the problem, then return inward or sales return should be subtracted from the sales. So sales includes cash sales or credit sales. Goods are sold to the customers or debtors, that means sales. This is the income of firm. Less return inward, inner column amount, total should be write down in outer column. Next item is buy goods lost by fire, buy goods lost by theft, buy goods destroyed, distributed as free sample, buy goods lost in accident, buy goods withdrawn by partners. That means outward movement of goods, all are direct incomes, hence it is recorded trading account credit side. Next item of trading account credit side is closing stock. Closing stock means stock that is unsold goods, stock in hand at the end of the accounting year. Students, always remember that closing stock is always valued cost price or market price, whichever is less. So direct expenses are recorded trading account debit side, direct incomes are recorded trading account credit side. Once you identify which are the direct expenses, which are the indirect expenses, which are the direct incomes, which are the indirect incomes, then final accounts are very simple. Now come to close the trading account. How to close the trading account? First of all, make the total, find out the total. Which side of highest value? Either debit side or credit side. ज्या साईडची टोटल जास्त आहे त्या साईडची टोटल दोन्ही बाजूला अगोदर आपल्याला काय करावं लागेल? रेकॉर्ड करावं लागेल. If the credit side total is higher than debit side total, that indicates gross profit. Gross profit, write down trading account debit side. Under the heading of to gross profit, carried down. If debit side total is higher than credit side total, it is recorded trading account credit side under the heading of by gross loss carried down. So credit balance of trading account indicates gross profit. Debit balance of trading account indicates gross loss. Gross profit transferred to profit and loss account, credit side. Gross loss transferred to the profit and loss account, debit side. Then trading account should be closed. Now come to the next point. Format of trading account. Simple way. Students, 4 आयटम्स कंपल्सरी ट्रेडिंग अकाउंट मध्ये येणार आहेत ट्रायल बॅलन्स मधील. विच आर दीज 4 आयटम्स ट्रायल बॅलन्स आणि ऍडजस्टमेंट मधील. फर्स्ट आयटम, trading account always start with opening stock. So write down trading account debit side to opening stock. Outer column मध्ये amount. Opening stock, that means stock in hand at the beginning of the year. Last year's closing stock become the opening stock of this year. So trading account debit side, write down to opening stock, outer column amount. Second item of trading account debit side is purchases. Purchases includes cash purchases, credit purchases. Goods are purchased from the creditors or suppliers. It is recorded trading account debit side. Third item, compulsory present in trading account, that is sales. Trading account credit side, write down by sales. Inner column amount. Why inner column amount recorded? Because any sales return or return inward given in the problem, so it is subtracted from the sales, and outer column amount final. Fourth number item is closing stock. Closing stock, stock in hand at the end of the year, that is unsold goods. So these 4 items compulsory present in trading account. To opening stock, trading account debit side. Buy closing stock, trading account credit side. To purchases, trading account debit side. Buy sales, trading account credit side. So in this way we complete trading account format, including all direct expenses and all direct incomes are recorded trading account debit side and trading account credit side. So students, read theory part carefully, copy down specimen in your notebook, do more practice. Good luck. Thank you.
Subscribe now and press the bell icon.